Says we may be stuck in a trap of infinite QE, quantitative easing, that could end with a currency crisis. Joining us is Peter Schiff. He's CEO and Chief Global Strategist at Euro-Pacific Capital. He's in Toronto on a visit. Thanks for being here.
Thanks for having me.
Tell us what your view is on quantitative easing. This is not a view that's shared by many people.
No, and first, my view has been consistent since the beginning. I said when the Fed first launched QE1 that it was a mistake, that they had checked into the equivalent of a monetary roach motel, that they had no exit strategy, that QE would continue indefinitely, that we would have increasing doses of this, monetary heroin, and eventually it's going to come to an end, but not because the Fed tapers. The Fed's actually going to do the opposite of tapering. They're going to up the dosage. It's going to end when there's a currency crisis. When the dollar collapses and then that morphs into a sovereign debt crisis, that's going to force the Fed's hand. But until then, it's just going to pretend that there's an exit. It's going to pretend that there's tapering, but it can't do it because it can't remove the QE without removing the recovery and putting the economy back into a worse recession than before the Fed began this experiment. You
don't see even a beginning to a reduction of bond purchases?
No, because, when they even talked about it last time, when the Fed talked about the possibility of maybe reducing QE, interest rates went way up. And that threatened to unravel the housing recovery, the bull market in stocks. And so the Fed had to back off. The Fed is saying that it's only going to take away the punch bowl if the party keeps going. But the party is going to stop if it takes away the punch bowl. That is the predicament that it's in. An economy that lives by QE dies by QE.
Peter, there's been a lot of concern about a currency crisis, and the Fed keeps printing money. There's two issues. First, we haven't seen the money leaking into the system and creating inflation yet. So when do you think we start seeing inflationary problems? And secondly, the bank's starting to see increased loan growth. So how is the Fed going to be able to maintain this credibility that it has when the banks are actually saying, well, we actually have real loan growth opportunities here?
Well, first of all, we are seeing inflation. Shoppers are seeing it. It's just that the government doesn't acknowledge it in the statistics. But it's going to get a lot worse. See, right now, in order for the Fed to keep interest rates artificially low, which the U.S. economy desperately needs, they have to keep printing money. So the Fed prints money and buys treasuries. It can only do that as long as foreign central banks buy up those dollars, because otherwise the dollar would collapse and then U.S. prices would skyrocket, including interest rates. So the question is, when is the world going to stop buying the dollars that the Fed is printing that it's using to buy up the bonds to keep interest rates artificially low? And that is, the $64 trillion question. But I think the day is soon. I mean, if you look at what's happening in China right now, China is now starting to see a reduction in the amount of U.S. Treasury bonds that they hold. And I think more nations around the world are going to stop buying these bonds, especially when we told the world that we're going to default on them eventually anyway. If you recall the debt ceiling debate, we told our creditors, if we can't borrow more money, we're going to default.
I don't think anybody really took that seriously, though. And really, are the Chinese going to allow the American dollar to depreciate against their currency? How are they going to sell us any of their products?
Well, right now,
aren't we really in a competitive currency devaluation situation right now?
Well, first of all, people didn't take the default threat seriously because they knew that we would raise the debt limit. But the principle is the same. If we can't borrow more money, then we will default. And so our creditors know this, so why would they want to hold on to these treasuries? But when you're talking about selling us products, see, that's a myth, because selling connotes payment. The world doesn't really sell America products. The world gives America products because we don't pay for them with exports. All we do is give our creditors IOUs, but they can never do anything with those IOUs. They can't spend the money. All they can do is keep rolling over treasuries in perpetuity, because the minute the world wants to stop rolling over their treasuries and they want to actually spend some of the money they earned, we default. Either that or we have massive inflation, but either way, the creditors aren't going to get paid. And eventually, they're going to figure that out, and I think they've already begun to figure it out.
Do you see asset bubbles? What about the big run-up in the equity markets that we've seen during the period of QE?
Well, sure, that's a bubble. That's where a lot of the inflation is showing up. It's showing up in asset prices, the same way it showed up when the housing bubble was inflating between 2002 and 2007. A lot of the inflation that the Fed created to artificially stimulate the economy went into the housing market, also went into the stock market, so it's going there again. But rising stock prices or rising real estate prices do not reflect healthy economic growth. It's inflation, it's speculation. That's all it is. It's our money losing value. But ultimately, those bubbles are going to burst if the Fed eventually does the right thing and lets interest rates rise. We'll have a worse financial crisis than 2008. If it does the wrong thing and doesn't let interest rates rise, but keeps printing money instead, then we're going to have runaway inflation and a much bigger financial disaster than what would happen if the Fed just let rates rise.
Interesting stuff. Thanks, Peter, for joining us.
Anytime.
That was Peter Schiff. He's CEO